Hi everyone, good morning, good afternoon, good evening to all of you wherever you are, right? Over here, I'm here in Singapore, so it's really a good afternoon, nearing evening time. Okay, it's today our session again, live trading session together with me, Isaac, your presenter. Now, before I begin, I just want to be sure that you guys can see me and hear me loud and clear. More importantly, able to see the slides, right? So not so much my face, all right, but more of the slides. Good afternoon, Daniel, right? Yeah, I recognize your name, right? It's great to be back, right? So I guess if you can hear me greet you, then that's why you return the greeting. Okay, so fantastic. I'm going to just dive right in, but very quickly before I start, I just want to go through a very short, simple disclaimer. Understand that the information contained in this material is really intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. Now, FP Markets has made every effort to ensure the accuracy of information at the date of this publication, but it doesn't give any warranty or representation to the accuracy, reliability, or completeness of the information contained here. Now, it's my duty as the presenter to ensure that whatever things that I'm presenting today is accurate at time of the presentation. All right, so very quickly, this is really the overview, the agenda for today, right? What I like to do during every live analysis session, market analysis session, is to give you guys a broad-based picture, right? First and foremost, you need to understand the broad-based picture from a global macro perspective, understand what are the top stories that are really going on in the markets today. And then after that, I'll dive into the risk sentiment portion where I will be looking across different asset classes to sort of put the big picture together for us. Why going forward into this week, it's always very important to understand the risk sentiment is really because I like to give the analogy that, you know, when you're driving, right? Sorry for those of you who do not drive, okay? But when you're driving, okay, along the expressway, along the highway, there are warning signs along the road, right? Like maybe animal crossing ahead, right? Or slow down, there's a sharp bend, you know, that kind of thing, or steep slope, right? Or the road, it goes to a dead end, right? There are always these warning signs, and risk sentiment is for us that warning sign, right? So being not paying attention to risk sentiment is just making our trading week a bit more risky. It's not that we cannot trade well. It's not that, you know, we cannot end the week profitable. All right, but risk sentiment just serves as that warning sign. Okay, and then after that, I'll look into some of the charts, which I think I'll do live analysis from a technical viewpoint and try to put it together with a fundamental view and give you guys what I think are the nicest setup. Okay, and then of course, I will wrap it all up for all of you. Now, if you notice over here, I don't put any Q&A. Well, that's simply because if you guys have been with me in this webinar before, you guys will know and remember that I generally do not like to keep Q&A to the end, right? I like to keep things a bit more interactive. I like to keep things a bit more flowing, right? So if you guys, any point in time, if you guys have questions, okay, feel free to fire your questions away. I will do my best to reply all of you, right? At the same time, if there are similar questions of similar nature, I will group them and reply them at the proper moment. All right, so with that, let's really begin by looking at some of the top stories for this coming week. Okay, so really first off, to just start off the story for this week, looking over at the stock markets, right? Stock equity futures were held steady today as markets reopened, especially US coming out from their July 4th holiday, and treasuries continue to weaken as traders wait. They factored in a jump in crude oil prices after a breakdown in OPEC ministerial supply talks. So the dollar index also dipped as well, right? Making commodities priced in the USD a bit more attractive. All right, so you have gold prices increasing, you have oil increasing, your silver prices increasing, right? Really because of that dollar weakening. Okay, so I would say that the first half of this week, right? The story for the first half of this week is really just focusing on OPEC and the oil story. Okay, I will get into that in a little while. Okay, so looking over at Europe, right, the stocks Europe 600 index was little change as well, in line with the S&P futures, the big brother of all market indices, as gains in energy shares offset a decline in car makers. Right, UK export heavy FTSE 100 index also edged lower as the pound rose on the country plans to lift social distancing rules just a couple of weeks later, right? Or if I'm not wrong, I think it's a week later. Okay, so Prime Minister Boris Johnson is looking to even tell his people that, you know, you probably don't even need to wear masks when going out anymore. Of course, giving some leeway for the what do you call that? The event, right? So if the event really requires you to wear masks, then unfortunately you will have to wear masks. So over here in Asia, Japanese stocks actually edged higher. However, Hong Kong, Chinese markets continue to slip lower. So what is really the oil story? Okay, so over here I have the chart that I actually took on Bloomberg, right? Lower oil output continues to support prices. As you can see, the chart on the upper half, right, shows OPEC production. Okay, OPEC production over the couple of years, and the latest is really 30th June, right? And then of course you have crude oil futures, all right, the last done price over the couple of years. And you can see that as sometime towards the end of 2019, right, when oil prices really dipped very low, that was when OPEC started cutting production to help to support oil prices. Okay, so I think actually this was this wasn't towards the end of 2019. Sorry, this was in March 2020. I'm not sure if you guys remember, where, you know, oil future prices at one point actually went into the negative zone before the contract rolled over, right? So OPEC actually cut output to support oil prices, and oil prices from there started rallying higher, right? So for most part of 2020, oil prices rallied higher. 2021 pushed higher as well. Okay, so the story right now is really on oil. All right, what has happened recently? So on last Thursday, right, 1st of July, the OPEC ministerial group actually came together for a meeting to start discussing, you know, maybe, hey, as a group, we should start increasing our oil production, start ramping up our oil production. However, the discussion got nowhere, really because there was a fight within the OPEC Plus members, especially Saudi Arabia and the UAE, right? So the UAE, okay, actually blocked the oil supply, increase. Why? Is because, you know, while the group actually agreed to up production, UAE actually feels that it's rather unfair, because every country, right, you can only up production a certain limit. So for the UAE, they felt that their limit was capped, and it wasn't fair for them to be kept to that limit. Now, from a country standpoint, for those of you who are new to this, right, from a country standpoint, it just basically means that, you know, if I produce less oil, I am unable to sell more, right? So if I'm unable to sell more, I cannot make enough profits for my country. So it's really a very business point of view kind of thing. Okay, so market investors are actually assessing the potential for conflict to further escalate this price war that could really hamper further economic demand recovery and add to inflationary pressures. Now, what is surprising is really the fact that normally, historically speaking, when there are arguments within OPEC, it's normally within the Middle East and Russia, right? It's always Middle East against Russia. Always have these disagreements that comes out into the media. We hardly hear of disagreements within the Middle East countries, and they are normally settled within the royal families, right, within the palaces. What's special about this time is really the fact that the political spillover has spilled over from within the palace walls, rather, within the royal families of Saudi Arabia and UAE, is spilled over into the public. Okay, so that's the oil story, right? and as you guys, if you guys followed me last week, right, I said that oil has very limited upside. Okay, for me, my short-term target was really $77 to $80 a barrel, and actually this morning Brent crude futures rose above $77 a barrel for the first time since 2018 early this week. Okay, so all the energy companies, energy stocks are also pushed higher. Okay, so I have the next chart that I'm going to show you guys. Okay, so oil prices push higher after OPEC meeting was abandoned after the talks fell through. Black line showing Brent crude oil futures. Okay, and then the red line showing the MSCI energy sector index price. So over here we can see that since the middle of 2020, right, when the start of 2020, all right, the second quarter, right, second quarter of 2020, we start seeing that Brent crude oil has consistently outperformed the energy index. Okay, so this shows that, you know, couple of things. Okay, the world globally was supposedly emerging out of the coronavirus pandemic shadow, right? So there's demand recovery, coupled with the fact that China is starting to open up domestic travel, US also starting to look open up domestic travel as well as within the Eurozone also, right? So that was why there was a lot of optimism. Stock market valuations hit an all-time high. After all-time high, it's just climbing higher, and we start seeing oil prices push higher in line with the stock market. Coupled with that, all right, we see treasury yields falling, the US 10-year yields. If there's time, we'll look through the charts later, right? The headline inflation actually continued dipping, in line with what Fed Chair Jerome Powell said, that, you know, this inflationary scare is really transitory. Okay, so back to the oil story is that after a couple of days of tense talks, OPEC and its allies abandoned their meeting yesterday, and a disagreement over how to measure production cuts that was brought out by UAE actually evolved into an unusually personal and public spat between Saudi Arabia and UAE. Now, Bloomberg has actually interviewed a number of market strategists, and what they're saying is that the relatively modest reaction in other markets so far suggests that traders across the board on a global level are still rather cautious over the long-term implications of the OPEC crisis. So if UAE were to leave the cartel, right, it might seem a bit too drastic, but that's really the extreme end. If UAE were to leave the cartel, there's a greater risk that the remaining producers would just ramp up supply, and this would ultimately send crude oil prices crashing lower. Okay, so sorry, forgive me. So this is really what the economists and the strategists are saying. They're saying that reaction across the other markets are pretty muted. So this is really more to do with the oil markets alone, and the focus right now is really on the oil markets. In the event that the disagreement gets out of hand, we might see oil prices tumbling lower. Okay, so that is the story for oil, right? And really, this oil situation is really fluid. Anything can happen. One day it's up, one day it's down. If you guys have heard me say before many times, when it comes to the oil market, what is very important to make money out of trading the oil markets, you need a very firm grasp on fundamentals, and you also need a very good grasp on technicals, right? So putting that together will really help you trade the oil markets relatively well. Okay, so OPEC negotiations could be reactivated if really things get better. However, the breakdown has damaged the group's image as a steward of the market, and this is sending a bit of scares to some people who are saying that, you know, we might see oil tanking again, just like early on in 2020 last year. All right, so that's the other big story, right? That's the oil story. Just to summarize what I've been going through. Okay, stock markets today open pretty muted, nothing much. I think people are just still sleepy, waking up, okay, to a trading week, a new trading week. The real big story is oil. Okay, moving on to another big story over here is TT shares tumbling in the US pre-market. Now, if you guys do not know, TT is actually one of the biggest private hire companies over in China. Okay, so when I was over in Shenzhen, I think back in end 2017, early 2018, right? Everywhere you go, okay, you just have to use the app and get your TT taxi. Okay, and it's really fast, really simple. Everything is all synergized inside the app, and no surprise why TT actually pushed out Uber, right? And even over here in Asia, you can't have Grab actually gaining a foot over in China. So TT is really like the king of all private hire and taxis and companies in China. So recently they were looking to list on the US, right, on the US stock exchange. And what really happened was that the Chinese regulators, okay, the Chinese regulators actually ordered the removal of the company's platform from app stores. All right, this came days after a 4.4 billion initial public offering over in the US. Okay, so TT fell as much as 30% to $10.90, taking them below the $14 IPO price. Okay, so normally, you know, when new companies actually IPO, you should see a big jump in their price before the market rebalances. Okay, I was talking to one of my friends over in private banks, and he says that, okay, this is actually a very common strategy where there are funds out there that actually take advantage of IPO listings. Okay, so they will actually take advantage of IPO listings, all right, and sort of play an arbitrage strategy. Okay, from when the company lists, let's say for example over here, you have China, you have Alibaba that is listed, right? The ADR is listed in the US, and then after that they are also listed in the Shenzhen Stock Exchange, all right, and this is where the funds would actually play the arbitrage strategy. All right, so TT's price actually fell in New York after the Cyberspace Administration of China barred new users, citing security risks and further tightening its grip on sensitive online data. So what is really interesting here is that, you know, this came after the 100th anniversary of the Chinese Communist Central Party, right, the CCCP. Okay, and President Xi Jinping was taking a very hardline approach, right, and taking the rhetoric that, you know, China is going to be at the forefront of the new economy, right? You're going to be global leaders, and anybody that you know comes against the Chinese should get ready to be dealt with in a harsh manner, right? Essentially, that was what he was saying. And he was saying that, you know, look at how we've effectively clamped down on the dissenters over in Hong Kong. And he also reiterated the fact that, you know, China is looking to claim back Taiwan as well. So very hardline message that President Xi Jinping was actually saying over the 100th anniversary of the CCP celebration. Okay, so and then the regulatory bodies start clamping down on TT, right? Citing the reason that, you know, as a global company, because TT was really backed by SoftBank and Uber, so the Chinese angle that they were approaching from was really the fact that such companies should not have more data than the Chinese government, right? Because by allowing foreign investors to hold a major stake in Chinese companies, which really makes use of Chinese citizens' data, all right, this posed a security risk, all right, which was really what the regulatory watchdog, the Cyberspace Administration of China, was saying. So reports are saying that the Chinese government tactics appear to have twin purposes of keeping its corporate leaders in check, while also making sure that investor pain lands primarily in the US more so than China. All right, so regulators already did ask TT as early as 3 months ago to delay its landmark IPO because of national security concerns, right? So in line with the drop of TT shares, Uber Technologies, second biggest TT holder, fell 2% in pre-market trading as well. All right, so all this contributed to the rather muted opening of the US stock market. Now, moving on to the next news, okay, Bitcoin, right? 2 weeks ago, I think it was 2 weeks ago, I was actually pointing out that, you know, Bitcoin, we are holding above this 30,000 to 32,000 fundamental psychological level. Okay, only if we break above the 40,000, 41,000 psychological level to the upside, then we should see a recovery in Bitcoin and cryptocurrency prices. However, we are back down again. Okay, not an issue, right? Because every time the market is at a key level, right, prices tend to trade sideways. Okay, so that's really the story of cryptocurrency. And on Monday, cryptocurrency Bitcoin actually dropped by 6.3%. Okay, so 30,000 is still the fundamental psychological level to watch. All right, and for those of you who are holding on to Bitcoin, I know it's painful because Bitcoin has lost almost 50% from its mid-April high. But you know, if you got in December last year, you're still overall profitable. So it really depends on where you got in and at what price. All right, so if there's time later, we'll probably take a look at the Bitcoin chart as well. Okay, so hi Travis, sorry, just saw your message, right? So to sum up the fundamental story that we really have for this week is that, you know, equity indices open relatively flat, nothing new, right? The dollar did lower, okay, as equity as equity drifted sideways. The story right now is really on OPEC and the oil story. Okay, so that is where we'll focus on, especially for major part of this week. And then after that, we also moved on to the Chinese stock markets, where, you know, China regulatory body is starting to clamp down on their major companies as well. So for those of you who are invested in Chinese shares, very painful time because the Chinese government tends to like to do this sort of intervention. Okay, and then finally, I pointed out, you know, on Bitcoin, 30,000, price is back at 30,000, fundamental psychological level. Okay, so that is really the fundamental story. Very quickly now, I don't want to take too much time. I want to start moving into the risk sentiment, and then let's take a look at some charts. Okay, I know I tend to overshoot quite a bit. I'm trying not to do that today. So what I have here on the slides is really the 1 week relative performance of the G8 currencies so far. Okay, so everything is compared to the US dollar. The US dollar is flat in the middle. It is the point of reference. Everything to the left of the US dollar, okay, is outperforming the dollar. Everything to the right is underperforming the dollar. Okay, so you have Kiwi and Aussie being the greatest outperformer. Not surprising, right? Because we are generally still within a risk-on environment. Okay, pound also outperforming the dollar. This came on news that, you know, Boris Johnson is going to start easing restrictions coming out of the COVID's shadow. Even though there are now reports that instead of the Delta variant and the Delta Plus variant, there is now the new Lambda variant that is apparently started off in Peru and actually has a very high mortality rate, right? So it seems like every time we have a new, we see a light at the end of the tunnel, right? People think it's the light at the end of the tunnel, but, you know, the pessimist in me tells me it's not the light at the end of the tunnel, it's actually the oncoming train, right? And then of course we have CAD falling against the USD, underperforming really because of oil, in line with oil. Okay, and then you have Euro and the franc underperforming as well. I suspect they're really waiting to see what the results of the ECB President Christine Lagarde's speech is all about. All right, so this is the snapshot. Okay, we are only at the start of the week. This thing is going to change. All right, we have quite a few heavy news that are coming out. Let's quickly move over into the charts. Okay, so while I have the charts here, right, okay, let me just clear this. Okay, I want to reply Jordan. First, Jordan has a quick question. She's starting out trading and very confused at the moment. because invested 10 to 20 pounds but lost it all. How much should I invest to start seeing some results? Okay, Jordan, not shaming you, no offense taken. 10 to 20 pounds, even if the broker were to give you a 1:1000 leverage, all right, which I firmly believe FP is not that sort of irresponsible broker, right? 10 to 20 pounds is really very little to start trading. Okay, even if you enter with 0.01, right, you're gonna get easily stopped out the moment the market moves against you. All right, provided you use stop loss. Okay, my own professional advice to you is using a very fair leverage of maybe 50 to 100. All right, a good amount to start off with, right? A good amount to play around, get a few of the markets. Live money, all right, is actually 1,000 pounds. Okay, 1,000 USD, 1,000 pounds. All right, that for me is enough to give you a small taste of what is going on. All right, especially when you're just starting out. Anything below 1,000 pounds, for me, you're really just gambling, right? So I don't think it's very wise to just throw money away like that. Okay, if you're uncomfortable with putting up 1,000 pounds, all right, you can write into FP and ask the support team, you know, how do I create a demo account? Okay, I know FP has demo accounts, so you can actually get started over there. All right, so Jordan, I hope that replies your question. Okay, let's move over to the charts. Okay, I want to start off with the E-mini futures first. All right, why I look at the futures is really because, you know, I want to see how the pre-market is really moving. So I have it on day chart here. I've actually prepared it already, right? On the daily, okay, you see that price has actually broke out of a range, not the neatest range, okay, because the S&P markets love to do this whole opening triangle wedge pattern sort of rubbish, right? But over here, if you really want to take it as a flag pattern with this flagpole, then the target is going to be a lot higher. All right, I'm going to switch over to the monthly chart. On the monthly chart, if I were to clear all drawings, there are no candlestick patterns, no. So why am I looking at the candlestick patterns? Is because normally at the end of the month or at the start of every new month, right, what I like to do, the practice that I have is to look for candlestick patterns, especially if there's market top or at market bottoms. I try to look for bullish or bearish engulfing, right? Because then it will tell me that, you know, the following month it might be leaning more towards the bullish sentiment side or the bearish side of things. Okay, so that is just my habit, and I hope to share that bit of juicy habit with you guys that you guys can start taking into practice. Okay, so whether you are candlestick pattern traders, whether you guys are trend traders, whether you guys are scalpers, doesn't matter. All right, end of the month, start of the month, always look at the monthly candlestick to get an inkling of where market is going to go next. Even better, more effectively, it works if it's at market tops or at market bottoms. Okay, so S&P just making new highs on the daily. We have actually already broken out. All right, if you ask me, technical analysis wise, momentum is very strong. No point going short on this. Okay, so we're bullish on the S&P. Very quickly, let's move over to the DXY. Okay, so DXY, you guys have been with me. People like Travis, people like Daniel, I recognize your names. Okay, so you know, I was already calling, right, for the dollar index to show a limited upside because of this daily descending trend line. And also, if you were to do a retracement of the high to the low, okay, and to open all Fibonacci levels, right, the trend line will fall in line with the 78.6 retracement. And last week we were somewhere over here, and I said we have limited upside. A break above the trend line will definitely see the dollar index strengthening a lot more. All right. I just had to turn on the light because it's about to be storming over here. All right, and the skies are really dark. Okay, so if we still hold below the trend line, then we might see the dollar drop lower. Okay, so we're already seeing the dollar drop lower. All right, slight pullback, but overall bearish on the dollar. So S&P bullish, bearish on the dollar. Let's quickly go over to the US 10-year yields. Okay, so US 10-year yields dipping a lot lower. right? The target for the headline inflation target at 1.29% still remains, no change over there, right? The 10-year yield is still drifting lower. Okay, we are seeing the Federal Reserve comments coming into play, really transitory. Don't have to worry about high inflationary rates, right? So as long as the inflation rate starts going lower again, we really might see the Federal Reserve start coming in to taper off their quantitative easing. Okay, so S&P higher, dollar index lower, US 10-year yield lower as well. And finally, let's move over to the VIX. Okay, so for the VIX, I like to look at it in line chart. If not, it's really just too ugly. And what I like to do is also to open number 26, because that for me is really the key level. Okay, so currently we are seeing that the VIX, which is a measure of fear of volatility in the market, is actually very low at 15.84. Now, this level was not visited since before the start of the coronavirus outbreak a year, slightly more than a year ago. Okay, so we have very low volatility, we have very low fear in the markets, right? So this all ties in together. Just really want to sum it up because I want to keep some time for market analysis. Now, let me just type this out, okay? So over here we have S&P, okay, bullish, and then we have the DXY, which is bearish, and then after that we have the US 10-year yields, which is also bearish, and finally we have the VIX. Now VIX, you cannot say it's bullish or bearish, right? But I'll say the VIX is really flat and low, okay? So because it is a measure of volatility, right? So putting everything together, you know, guys, just want to get a sense that you guys are still with me, right? Paying attention, okay? What do you think the risk sentiment for this week is going to be? Okay, so I've got a couple of answers coming in. Okay, Travis, please tell me that you have a typo, right? It's as long as the S&P is bullish, that is a very leading indicator to let us know that, you know, we are in a risk-on environment. Okay, we are in a risk-on environment. Okay, because there's no volatility, very low fear in the markets, right? And the S&P is still making all-time high. Okay, so generally speaking, still very much risk-on. Now, dollar can swing. Okay, the dollar can swing from being bullish to bearish depending on the state of the US economy. So that is something that you can just take with a pinch of salt, right? And then of course, as long as interest rates are low, okay, when interest rates are low, nobody will want to buy bonds, right? So they start moving their money over into the stock market. That's why you have the stock market being bullish for higher returns. And as long as people are chasing higher returns, they are more risk loving. Okay, so the risk sentiment for this coming week is one that is of a risk on sentiment, right? So you guys got to be careful if you're going to if you're going to long the dollar, right? Just be a bit more cautious because the dollar is really still kept below the descending trend line on the daily. Okay, so because there are quite a number of news coming out for the USD later on this week, right? Let me just bring up my economic calendar. Okay, so yeah, in a while, right? We have the ISM non-manufacturing PMI data coming out from the USD, and then tomorrow we have the Canadian IV PMI, and also we also have the FOMC meeting minutes, followed by the ECB monetary policy statement coming out on Thursday. Okay, and then of course on Friday, very heavy news for the UK, where we have GDP, we have manufacturing production, and we also have the Bank of England Governor Bailey giving his speech, followed by President Christine Lagarde of the ECB giving her speech as well on Friday. So Eurozone UK, very heavy going into Friday. All right, I personally don't like that because every time it's towards the end of the trading week and then you come up with all this heavy news, it's just going to be very market moving, especially if it's unexpected. All right, so I just want to take a look at the dollar pairs. So okay, since Gareth is actually asking on the euro dollar, let's start off with the euro dollar, shall we? Okay, so I have the euro dollar over here. Like I said, end of month, start of month, really like to look at the monthly candle. And what we have last month, we actually ended with a bearish engulfing, which is why this month we started seeing the euro drop lower. Okay, so bearish engulfing, nothing much to see other than the bearish engulfing for last month's candle. And it also comes along with a strong preceding uptrend. Right, and then after that we go on to weekly. Now weekly is what I want to show you guys. Okay, weekly is what I want to show you guys. Just want you guys to focus on this area right here. Okay, if I were to connect the highs, I'll touch as many candles as possible without cutting the candle body, and then connect the lows. Okay, we essentially get a symmetrical triangle pattern. Right, and how do I know that there's a triangle? We have the triangle ratios from low to high. Price tapped the 78.60 level. Okay, we take the other side, high to low. We see the price tapped the 78.60 level again. And finally, right, we can see the price is coming close to the 78.60. It tested and is coming close to the 78.60 level again. So if anything, my immediate support will be over here. Okay, so I have an immediate support over here. Now that I've identified my weekly strong support, okay, let's quickly go down to the daily. Okay, I'm going to remove this triangle because you already know that at the end of the day, it's really a triangle. Now, what I see, what I'm expecting for the euro dollar, very briefly because of what I saw on the weekly, is for price to just push lower towards this triangle support. Okay, so if you don't look at the what do you call that? If you don't look at the weekly chart, all right, a lot of people will think that, hey, you know, we're bearish and I'm going to go short all the way and I'm just going to go short to this level over here. However, before you even get to this swing low on 30th March, you're going to face a big root block over here, which is the triangle support level at the 118.073. Let me just make the font size a bit bigger so that you guys can see it better. All right, so 118.073 is going to be the first immediate support. If anything, I should expect price to just drop down to this level. So perhaps intraday play is going to be pretty nice. You're going to have some nice intraday play towards this weekly support level. I'm going to do a retracement from the high all the way down to this swing low over here, and we see that the daily resistance is actually at a 38% retracement level. All right, and that was where price actually tested. It was a support turn resistance. All right, so there's a pullback already done. Okay, let's go down to the 4 hours. Okay, so 4 hours, not very nice. You have this swing high, short-term swing high to this swing low. Okay, and if you do a retracement high to low, now you see that price actually tested and reacted under the 50. Sorry. So price tested and reacted under the 50. Okay, again, not very nice risk reward. I would not personally, as a swing trader, I would not pursue this trade, okay, to play this drop down to the 118.073. All right, so these are again the levels. Okay, if 118.073 is broken, I will personally be looking at the next support, which is the negative 27.20 level at the 117.61 level. Okay, 117.61, 117.60 level. All right, so really just giving you guys key levels to watch here because I don't see any nice risk reward ratio. Let's quickly go down to the 1 hour. All right, so you see a very strong drop. You see a very strong drop. I just want to check something. Yep, falls in line. Okay, so price has broken out of this descending trend line resistance, turn support. Okay, when price broke out here, everybody thought, okay, you know, hey, we're going to go bullish, right? However, if you already do a long-term analysis, you'll know that on the monthly, we had a bearish engulfing candle open, right? There's a bearish engulfing candle. The last thing you want to do is to trade against the long-term trend, right? So if you're going to go bullish, you should ideally have very small position size. Okay, so if anybody that went bullish, if you catch any pips, that's good for you. But for me, I like to see trend line breakout and pullbacks. Personally, based on my professional experience, all right, this is something that works very well. Over here, we have 1 touch, 2 touch, 3 touch, 4 touch, breaks out, right? Price has never tested this trend line pullback at all. And now it looks like price is going to drift lower and test the trend line pullback. Okay, so we have broken out, and whether it bounces from here is a different story. But right now, what I see for the next couple of hours or so, okay, euro dollar is going down to this level. All right, and after that, I will redo my analysis again and see where price is going to head to next. All right, so Gareth, I hope this answers your question on euro dollar. Okay, we have a question from Andrew, right? Andrew, your trade PJ short. Okay, I'm not sure what PJ is referring to, something yen, right? Maybe you can let me know, and then I will get to that shortly. Okay, so now that we're on euro dollar, I really want to show you guys Aussie dollar as well. All right, so Aussie dollar, let's start off with the monthly. Now, Aussie dollar, last month we had a bearish engulfing. Okay, Aussie dollar was a very painful pair for me, right? I really struggle with this one, but I'm going to attempt to reanalyze it again for you guys, right? So we have a bearish engulfing, right? Happened at the end of a very strong preceding uptrend. Okay, that's all you need to know, right? Let's go down to the weekly. On the weekly, right, we see price making a base over here. There's a bullish engulfing and then price pushed higher, right? So let's do a Fibonacci retracement from low to high, and we see that the 61.8 graphical overlap is actually in this area, right? So we have a graphical overlap at this area. I'm thinking now that price has broken below 23.6, 38.2 and has tested 50, right? Aussie dollar might see a drop down to this 61.8 level. All right, might see a drop down to this 61.8 level. Not too sure. Okay, it's only the start of the week, right? And let's go down to the daily. Okay, the daily, it's a bit more complicated. All right, let me just tidy up this chart for you guys. There is actually a zigzag over here. Let's do the Fibonacci extension. 0.1, 0.2, 0.3. And you see that 100% is actually higher, closer to where price spiked before. All right, so not the best Fibonacci extension. I'm just going to leave the ratios there. I'm going to do a retracement from the last high to the low. And we see that, you know, price seemed to have formed a double bottom pattern, right? So it's dropped down, strong preceding trend, make the first low, comes back, makes the second low, testing the neckline. All right, so for Aussie dollar, the immediate resistance is over here. Okay, as long as price rejects below this 76.16 level, okay, I would actually go short down to 73.65.8. All right. Otherwise, if price breaks above, okay, if price breaks above, my upside target will be this descending trend line resistance, very limited, in line with the retracement, okay, somewhere around the 61.8 level. All right, so really key levels to watch. My bias for Aussie dollar is bearish. All right, so this is what I just want to share with you guys for this coming week as well. Okay, so we have a few other questions. Okay, so back to Andrew questions. Okay, so you're talking about pound yen, right? Normally pound yen we just go, or rather I go for GJ, right? I say GJ because it's really GBP, JPY. All right, so let's look at pound yen. Okay, so pound yen, remove drawings and indicators, start off with the monthly. Let's look at a monthly candle. Nothing much, right? Really nothing much, just that, you know, price is really kept below resistance, monthly resistance over here. All right. And let's do a retracement of the last move from this low to this high. 23.6% is over here as well. Sorry. And green for support. All right, and then let's go down to the weekly. Now the weekly is a bit complicated, right? You guys will probably be a bit confused with this pattern here. Okay, I see an irregular zigzag, something like that, so I can actually use Fibonacci extension to see if price breaks to the downside, where price may end up. All right, so we have the 127.2 falling in line with our monthly 23.6 level, and then after the next support, the 161.8 is actually at a swing low over here, right? So we have the two weekly support levels that we've identified. Price is holding between the monthly resistance and monthly support. Let's quickly go down to the daily. Okay, so on the daily, if you ask me, just by looking at the market structure alone, right, price has originally been making higher highs, higher lows, right? You have higher highs, higher lows, and then price comes down, makes a higher low, right? Higher low, you have one higher low, two higher low, three higher low. But now the first clue that the market is giving you that, you know, price could very well be reversing is this lower high. Okay, price is making a lower high. Now, if I were to draw a trend line connecting these two, okay, I don't like to see this kind of market structure. I will be very honest with you guys, because it just means that price is right now within a consolidation pattern. If I'll do a descending trend line like that, okay, very limited upside. Now, also you can draw a ascending trend line however you want, and also it shows very limited downside. But I will not draw this ascending trend line yet. Why? Because in terms of market structure, I want to see price at least make one more low and then a rejection. If price makes one more low and then a rejection, I would have three lows to draw from, and I can connect the ascending trend line, and this gives me greater clarification on the structure of the markets, right? However, for now, I'm just going to make my support a lot tighter. This is a bit too far away. I'm going to make my support tighter at this level over here. And let's quickly go down to the 4-hour chart. Okay, 4-hour chart, I'm going to adjust the trend line. You can see that this trend line is really holding very well. 1, 2, 3, 4, 5, 6, 7, right? It is holding very nicely. Let's do a retracement of this move. High all the way down to low. Okay, and you can see that price is actually kept below the 61.8 resistance, right? So price could very well just be holding below this 61.8 resistance, and it might drop down to the support where I've identified the swing low on the daily, which is actually in line with the negative 27.20 on the 4-hour, right? Not the best risk reward ratio if you ask me. I just want to go down to the 1-hour to check. Yeah, the one hour is a bit strange for me. Just give me a moment. 0.1, 0.2, 0.3. So the extension reacted at 76.40, which is also close to the 4-hour 61.8 retracement. And if I were to draw, see whether there are any trend line breaks. Okay, this is just testing the trend line. Okay, unless we have a close and an open below this ascending trend line support, right? I'm not going to go short. I will actually wait for price to come back up to my resistance before I go short. All right, so pound yen on the whole is definitely bearish. Just that as you go down to the daily, you start to see very ugly configuration. You do not know whether it's in a triangle yet. What is clear is the descending trend line resistance. So leaning a bit more to the bearish bias, but overall unclear, right? So this is something that I will wait for. Okay, so now we're done with pound yen. I'll just leave it here a while for levels to watch, and then I will move on to gold. Okay, so gold was actually one of those that I wanted to analyze. All right, so gold, let's start off with the monthly. Now the monthly, not impressive. I would not consider this a bearish engulfing, because a bearish engulfing for me would have to happen right at the top of the trend. This is really when price is within a sideways market. So nothing cool, nothing nice. Let's go down to the weekly. On the weekly, what I want to show you guys is really this week, gold price just opened a lot higher. Okay, you do a retracement of the last move, low to high. We reacted right on 61.8, right? So we have a 61.8 retracement level there, which is holding gold price. Okay, and then of course you have a very strong graphical swing high over here, right? If you ask me, over the next couple of 1 to 3 weeks, we might see gold prices push higher to this last swing high. All right, but you never know for sure, because what is the overall market structure? Overall market structure is lower highs, lower lows, right? So you might see price do something like that. Okay, so you never know for sure. Let's just identify the key levels first. All right, quickly let's go down to the daily. Now on the daily, the picture is a bit clearer now. Okay, I would want to test you guys, but in the interest of time, okay, I'm just going to point out we actually have a double bottom pattern, right? Strong preceding downtrend, double bottom pattern, break of the neckline, right? We can do a retracement. High to low, we're broken above the 23.6, right? The next level to look out for is this graphical overlap 38.2, and then of course finally the key target at 61.8. All right, so if anything, I'm bullish long term on gold, right? At least for the next couple of 1 to 2 weeks. But I don't like the daily picture. The daily picture looks like we're kept below this 38.20, and price could do something like that, right? You know, every time there's a breakout, price likes to test the breakout level. Okay, so price could do something like that. Tap the 38.20, comes down, test the double bottom breakout neckline, and then after that push higher to the 61.8. So it's just something for you guys to be cautious about. I'm going to remove the monthly high, okay, and just remove this. Just key levels to watch again. Let's go down to the 4 hours. On a very strong uptrend, on the 4 hour, you see another double bottom pattern form in close, very clear, right? Let's look at the indicators, okay, and you actually see, sorry, not this. Yeah, the momentum indicators actually show that, you know, we are above the moving averages, and MACD is above 0 in a very bullish environment. Okay, so the dollar for me, long-term bearish, right? Just got to be careful of this resistance on the 1813. Okay, so give you time to digest this again, and then we move on to Muhammad. I hope this is good for you, right? And we move on to Travis's request. Okay, a lot of requests today, guys. So let's look at Kiwi Yen. Okay, remove all indicators. Start off with the monthly candle. Now, monthly candle, very nice. Kiwi Yen, we have a bearish engulfing, right? We have a bearish engulfing. So this month, ideally, we should have something that is slightly more bearish. But even though we open and push higher, right, back to the slides, you guys can see very clearly that right now, this week, okay, the Kiwi is the one that is strongly outperforming against the dollar. So not to worry, this ties in very nicely. Weekly, monthly resistance just right up here. Just going to graphically put a level there. Let's go down to the weekly. Okay, on the weekly, I'm going to do a retracement from the last swing low to swing high. Oh, sorry, wrong direction. Okay, you can see that price is holding above 38.20 level as well. I'm just going to put it over here, 38.20, green line support. If you guys want to use this as a last swing low, right, I'll not stop you guys. It's possible as well, because this is a graphical level. So it actually is stronger, but it's actually close to the 38.20. So I'm just going to draw a box to show that really this is a zone. Okay, so price is holding between the weekly support and monthly resistance. Let's go down to the daily. Okay, daily, nothing much to see. We just do a retracement from the high to the low, and price just touched 61.8. Okay, which is why you're starting to see a bit of resistance here right now. Okay, so price just touched 61.8. Okay, in terms of market structure overall, still bullish, right? We have higher highs, higher lows. All right, let's go down to the 4-hour. Okay, on the 4-hour, this is what I see. I see a very nice zigzag that I can draw using Fibonacci extension. 0.1, 0.2, 0.3. Price is testing right now the 76.40. I'm just going to tidy it up a bit. 76.40, we have the next level, the 100% over here, right? And price is actually holding above. Price is actually making higher lows, right? What I see for this, okay, I'm thinking price could very well come down, make another higher low, and then push higher again. Okay, so this is just what I see, right? I don't really like the picture over here, so I want to look at the indicators. So indicators showing bullish momentum, right? So I will be very careful playing this drop. All right, Travis, I'll be very careful playing this drop. Kiwi yen right now, very mixed. Okay, let's go down to the 1 hour. It's just, so 1 hour indicators are bullish as well. We're sitting on a very nice ascending triangle pattern. All right, on a breakout, okay, breakout, I will know that I'll just play up to this target over here. Okay, breakout over there. Right now, I would not go for a short because indicators are very bullish. All right, monthly, even though we have a bearish engulfing, we already open higher, so might want to be a bit more cautious on that. If I really want to go short, okay, I will only go short if we break below the ascending trend line support. All right, so this is my view for Kiwi yen. Okay, Travis, hope that helps you. 3 minutes, let's see what I can do. All right, guys, sorry, I'm a bit rushing this. Okay, I'm trying my best not to rush, but at the same time, give you guys as much value as possible, extract as much value as possible. All right, in Singapore, we have this term to when we talk about extracting as much value as possible from something. It's talking about being kiasu, right? It's also called, in dialect, it's also called scared to lose. Okay, so we have Bitcoin over here on the monthly, nothing interesting as well. It's just a parabolic shape. Some people saying that you're going to start seeing it like a normal distribution graph, which then mean that it could drop all the way back down to 5,000. A bit far-fetched if you ask me, but hey, anything's possible. All right, again, for me, weekly, nothing interesting also because you can take a retracement from this low to this high, but it's really a parabolic retracement, so it doesn't work. I don't like that. Right now, Bitcoin for me, the only thing that's interesting is on the daily. All right, so on the daily, what we have, okay, is actually a divergence, right? It might be tough for you guys to see, but we do have a divergence over here. All right, you can see very clearly now with MACD lining up, right? We have a divergence. Okay, and price is in between moving average, which shows that really we are not trending at all. We are just within a sideways zone. I can do a retracement from the high to all the way down to this low, and we can see that the 38.2 retracement level is kept here at a 41,000 level, which I was actually pointing out to you guys earlier. Okay, and then of course the support is down here from me, which is the 3125 level. So Bitcoin is trading within a very broad range. Okay, let's go down to the 4 hours. I don't like the market structure either, right? Because even though it's making lower highs, okay, it is making higher lows, right? If I were to draw a trend line connecting all this, not the best trend line because this one doesn't come close at all, right? And this too is a very ugly trend line. Okay, so using Fibonacci extension, 0.1, 0.2, 0.3 over here. Hey, where's my 0.3? Okay, wait. 0.3 over here, right? We have a 61.8 that is right here. Okay, and then of course a graphical low for me will be this level here, 0.1, 0.2. Stop doing this, come on. Okay, 61.8 is over here as well. So really key levels to watch for Bitcoin. All right, I'm just going to show you the key levels to watch. Okay, Sean, for me, I would not touch Bitcoin at this moment. If I'm already in, so be it. all right, then it's really a question of whether you want to take out your profits, okay, or you want to cut your loss, right? But right now it's really at a very key level. There's a divergence at play. I will not do anything unless I see price very close to 40.8780, all right, or 31.25. Okay, so that's all the time that we have for today, guys. Just remember, right, if you guys have any questions that you want to have replied, okay, please email support@fpmarkets.com. Otherwise, you guys can always check out the fpmarkets.com/trading-webinars/website, right? All the upcoming webinars are there. Okay, my friend Aaron would also be conducting very nice topics for you guys to look at, and I will also be continuing to do the live analysis portion, right? So thanks once again, everyone, for your time. Just remember, start of a new trading week, start of a new month, gotta be a bit more careful. The story for this week is really oil. The risk sentiment that we have for this week is one that is slightly more risk on. Okay, so I wish you guys all the best. Trade safe, stay safe. I'll catch you guys again. Until next time, take care and goodbye.